This is Jamie. Jamie and her family have been investing in the New York Stock Exchange for the last 5 years. Over the course of their investing, they have received both revenue and losses, but their primary gain is stress. Between work, their kids' soccer practice, ballet lessons, spelling bees, and parent-teacher meetings, worrying about the stock market going up and down and when to buy and sell their shares has become way too much of a burden. Not to mention the high risk of their family's financial security riding upon their investments. Jamie and her husband want to pursue a new investment option that will create less stress, less risk, and a substantial reward. Jamie has done her research and has come across the idea of becoming a passive investor. Jamie has learned that passive investing is when an individual contributes their money as an investment and allows another firm, group, or company to manage the day-to-day activities of the investment. Passive investing allows investors like Jamie to receive continuous distributions from their investment without much daily hassle. When the asset is sold, Jamie will receive a substantial return on her investment that will accumulate the wealth and financial freedom for her family that she has always desired, not to mention the reduction of her stress. This is what makes a passive investment passive. It's hands-off, allowing Jamie and her husband more time to enjoy life and the financial ability to send their kids to the college of their dreams.